morning. I'm Maiki Oreta with the latest in business here on the Bilyonaryo News Channel. Inflation in the Philippines breaches the upper end of the government's 2 to 4% target for the first time this year. The Consumer Price Index coming in at 4.4% in July on the back of increases in utility costs, including power. Increases in food prices also drove inflation higher for the period. As inflation shoots up, NEDA Secretary Arsenio Balisacan assures Filipinos that the government is relentlessly working to achieve its goal of food security. As for the Philippine Central Bank, they say that the risks to inflation have shifted to the downside following the government's move to lower the tariff on imported rice. But the BSP also notes that higher food and transportation costs may continue to push inflation up in the coming months. Meantime, the president of BDO Capital and Investment, Ed Francisco, shares his thoughts on the July inflation print. He says that given the uptick in inflation, he won't be surprised if the central bank decides to keep its rates unchanged at the upcoming August 15th meeting. Let's take a look at how the PSE index is doing today after joining Monday's global sell-off. So far, the PSE index is higher by 0.5% to 64.68. All shares index up by about as much, up by 0.47% or 0.5% to 35.32. The financials index up by about as much as well, up by 0.5%. Meantime, the industrial sector is down by 0.7%. Holding firms up much more, twice that amount of the PSI index, up by 1.12%. Services down by 0.5%. Mining and oil taking a hit, they're down 1.8%, while the property sector is surging, up by 2%. Now, taking a look at the foreign exchange market, the peso opened at 57 pesos and 96 centavos, slightly weaker from yesterday's close at 57.90. So far, it's reached an intraday high of 58.02 and an intraday low of 57.91. Now, taking a look at the other Asian markets, Japan's Nikkei 225 is rallying, up 9% so far in today's trade after entering bear market territory the other day. South Korea's Kospi Index advancing more than 3%. Australia's ASX 200 and Hong Kong's Hang Seng Index are also in the green, up by 0.25% each. Investors are catching their breath as they try to refocus after Monday's market meltdown. Now, speaking of the global sell-off, U.S. and European markets tanked overnight as fears of a recession in the world's largest economy, the United States, deepened. U.S. stocks saw their worst day in nearly 2 years as anxiety over a weak July jobs report turned into a widespread panic. The tech-heavy NASDAQ dropped 3.4% to 16,200 after Apple lost 5%. The S&P 500 dropped 3% to 5186, while the Dow lost 2.6% to settle at 38,703. Adding to the jitters are concerns the U.S. Federal Reserve may have waited too long to start cutting interest rates.
I think we have a combination of a growth scare and a Fed policy scare. So in other words, we went from months and months of when's the Fed going to ease and how much are they going to ease this year and next, to one where growth is plunging and the Fed is behind the curve. So we've had a change in attitude. It's been based on some weakening data, but certainly the big report on Friday. So in our opinion, is the economy slowing? Yes. Is there any need for an emergency Fed cut? Doesn't look like it in our opinion.
The downbeat sentiment also spilled over to Europe, with London's FTSE 100 falling 2%. Let's now take a look at how the major U.S. indices may open when trading resumes tonight Manila time. So far, all three are poised for a higher open. And those were the latest business stories this hour. I'm Maiki Oreta. Keep it here on the Bilyonaryo News Channel, always on top.